Can I go get my coffee, or do I not have time? No, no time.
Well, good morning, everybody, and welcome to the Daily Energy Markets podcast. It is Friday, May 26th, nearly June, nearly D-Day. It is, as they say in America, Memorial Day weekend when the summer officially starts and everybody goes to the Indianapolis 500. Some people have to do certain things once in a life, but if I could recommend one thing you do in your life is go to the Indy 500 car race. It is the biggest party on the planet and a hell of a lot of fun. And it has a tangential relationship to this podcast because there's cars driving around and they use fuel, unlike Formula One, which I don't know what they use in their cars, but it's some sort of rocket medicine. Brent crude oil is trading a little bit down this morning, $76 thereabouts, and ultimately the idea is a little above $76, come off after some rather confusing, somewhat, conflicting, might be a slightly big word, between the Saudi energy minister indicating the willingness to do whatever it takes to keep the market from shorting, and the sort of word had now become a regular for the minister of Saudi Arabia. He was going to make the shorts ouch, and then the Russians saying to a certain extent the opposite, that no more cuts are necessary. I'm wondering, as we kick off this morning with Kate Durian, Mies contributing editor, non-resident fellow at the Arab Gulf States Institute in Washington, and one has to acknowledge she hasn't had her coffee yet, but she does get the starting question, and that is, how long do you think that these two can coexist? Saudi Arabia willing to do whatever it takes to prop up the market, keep the shorts out, and Russia literally saying whatever it takes but pumping all it can?
Oh, I think that both of them need each other. I don't think they can, they can afford to allow this alliance to fall apart. But I also think that Saudi Arabia basically runs the show. I think, and we've seen Novak say in the past, whatever my colleague Prince Abdulaziz says, I go along with it. And I think it's maybe part of a strategy to keep the market guessing. And I think that's what Saudi Arabia wants, is to keep the market guessing, to stop speculators from taking these short positions. And he was referring, when he was speaking in Doha, Prince Abdulaziz, he was talking about ouching, when they announced the voluntary cuts, not that they would ouch. But again, if you look at the way that OPEC Plus is managing its affairs, it's gone very silent. So, it's very difficult to get a feel of what's going on. In the old days, we used to get, sources close to the Saudi government, or, official sources, anonymous sources.
The Gulf source says.
The Gulf source familiar with Saudi policy. And we used to get some kind of a steer. It may not have been the right one, but they used to float these trial balloons. It doesn't happen anymore. And I think that's what the intention is, to keep the market guessing. And I mean, it's very hard to tell whether they will cut, whether they will formalize the existing cuts, but it looks as if the cuts are working. So I think, and prices are just below 80. I think they're at a comfortable enough level, but obviously, they would prefer to have them higher. But whether 80 is the target, above 80, I don't think we know.
Dr. Aldo Flores Quiroga, former Deputy Secretary of Energy for Hydrocarbons, Mexico's Ministry of Energy, and Senior Advisor at FTI Consulting. And also, which is not on your very impressive job titles, is the former Secretary General of the International Energy Forum, which of course puts you in the unique position of having both consumers and producers as part of the membership of that organization. I think one thing that Kate said, Dr. Aldo, is that is crystal clear with every secondary source and every reporting announcement that Russia is not complying with the announced cuts that they have announced while the others are. And that is sort of return to old habits. And I'm wondering, from your perspective, is that a sustainable equation where the Gulf states, the Gulf Arab states, members of OPEC Plus, do the heavy lifting while Russia enjoys the price benefit of that?
Oof, what a question. I think that...
I ask it because 3 years ago in March 2020, when this divergence happened, where it looked like OPEC Plus nearly collapsed at that point. And so there is record, there is sort of previous where this train has gone off the rails.
Yeah. Well, the thing is that as long as the war continues, the effort to continue supplying the market through these alternative channels that the Russians have found will be sustained, and that means that there is that Russia has an incentive to and requires to collect this income in order to fund its war effort and its economy. So it's not that easy a position for Russia to adjust given this situation. I think, however, that Russia, as the rest of the members of the arrangement, OPEC Plus, would rather have stable markets, clear some of the uncertainty that has been already, well, it's 3 years of uncertainty, but let's say that for over 6 months now, it's fairly clear that it's very difficult to tell where this market is going. So it seems to me that there will still be a way of collaborating, considering that Russia does have this incentive to produce more and sell more, given its war commitment.
Let's welcome to the table Daniel Rahmat, Senior Energy Security Consultant based in Tehran. Daniel, I don't know if it was a year ago, but it seemed for a period of time we could talk of nothing else but the so-called Iranian nuclear talks in Vienna that went on and delivered at the end nothing. But what was at stake at the time appeared to be the ability of Iran to bring a lot of oil back into the market. The nuclear talks failed, never arrived at their destination, but it seems Iran is exporting as much oil as it can. Is there a view that that is now the new reality?
Actually, I think the international community is considering the Ukraine war as the first priority of the world powers, and then considering that there is no room for such high-level negotiations when there is a bigger crisis going on. So neither Iran nor Russians nor the Western powers are now considering this as a very crucial issue, as a very actually critical problem in the world. So everybody is waiting for the war in Ukraine to get to a sort of conclusion, and then there would be chance for negotiating an Iranian nuclear program or things like that. Iran, with different leverages, tries to push Westerns, sometimes even pushing Russians for considering the Iranian issue as their priority, because at the moment, despite Iran is selling huge amounts of oil, the most fundamental problems in the country, which is investing in upstream oil and gas, is not yet solved. So I think at the moment, Iran, with testing some long-range missiles and exporting more oil, supporting its proxies, sometimes tries to get Americans and Russians and the other powers back to the table. But at the same time, what Iran demands in the new negotiations, which happened last year, is considerably different with what Iran agreed on JCPOA. So I think that the issue is yet very complicated, but there is still a chance to get to a sort of deal. But please let me tell you something about the oil deliveries of Iran and the others to the market. You know, Iran is steadily increasing its deliveries to the market, both refined products and crude oil condensates. But market, as you know, there are other elements. For example, Iraqi oil costs to the Iraqi Kurdistan oil cost is a very important problem. You know, 400,000 barrels is now caught, but as soon as Turkey agrees to pumping the oil again to the Ceyhan port, we will have more 400,000 barrels. So I think we are going to face new waves of more oversupplied oil to the market, including Iranian and especially Iraqi oil.
Kate, coming back to the previous question and after the comments earlier this week by the Saudi Energy Minister, Prince Abdulaziz bin Salman, to watch out, was the quote to the short end of the market, that ultimately there are diverging strategies here for Russia and Saudi Arabia. Russia doesn't really need higher prices because their taxation system, etc., and how it prices its oil is one thing, and B, the price cap is the other, and they're selling their oil at a discounted rate anyway. And in some ways, the higher the price goes, the more stress it puts on buyers keeping within the legal price cap and allow the oil to flow and so forth. Where Saudi Arabia obviously needs a higher, or seeks out an $80 balance your budget price. These are divergent interests. Do they not get stressed as we go forward here? You say their interests are aligned, they have to stay married, but clearly these are diverging interests.
I mean, let's put it this way. Russia can't really produce more than it's producing at the moment. You know, not much more. They are producing at close to maximum capacity. We don't know
but
how
they can cut.
They can cut. I mean, and they have cuts, you know, maybe not by the 500,000 that they pledged, but they have cut. And if you look at the shipping data, it is down. And don't forget, pipeline oil is a lot easier to sell above the cap than shipping, you know, because the sanctions are on shipping. So if you don't sell at the price cap, you can't use ships, you can't use insurance, you know, which is mostly Western based. So I think, you know, if you look at what OPEC was before and what it is now, OPEC plus, it's really, I mean, forget about all the others, you know, other than Russia. They have a bigger share of the market, and that's really allowed them to have more impact in their decision making. Where if it were OPEC alone, then, you know, it sort of weakens. So I think it doesn't really matter because, you know, let's not forget, Russia has not really abided by quotas, and yet they've kept them in. It's more the optics, you know.
What about the other side of the coin? There's after the Saudi comments and even before, but nonetheless, the theme resurfaced that it's a waste of time to try and fight the market on the short side. It's too big. It's too the paper market is just far too big for OPEC to fight.
Yeah, and they know it. You know, for each barrel of physical oil, you've got, you know, I don't know how many paper barrels. So yes, it is difficult, but I think at the end of the day, you know, whatever you say about physical markets or paper markets or derivatives, it is about demand and supply. It is about your level of stocks. You know, if your stocks are low, and now the IEA is saying that they will ask members to start replenishing stocks, which they didn't do when the market was a lot tighter. Now you have more spare production capacity. So the market is under more pressure than it was. And, you know, as you start building stocks again at these prices, which allows for stock building, then I think you might see a weaker market, at which point they will act. But it doesn't look, I mean, you know, all that tightness that people were talking about, the second half is going to be tight. Let's wait and see. Let's wait and see what happens in China. You know, demand in China, jet fuel, is it going to take off if they, you know, if they increase international flights? What happens Labor Day today? You know, are they going to take to the roads and use more gasoline? But if you look at the sort of, it's a short-term game now, because we were at this MPGC conference recently, you and I, and we heard Fesharaki, others saying, you know, oil demand in China is going to peak a lot sooner than anybody anticipated. In fact, it's going to peak in China before it peaks anywhere else. So, and you're seeing a lot more spending in renewables. So basically,
but the more immediate thing was said at the MPGC this week was that in the second half of this year, oil demand is going to be 2 million barrels a day higher than it is at the moment. That was from Mike Muller and some others. So that very bullish outlook continues to be in the market, and yet this is a market in which OPEC Plus is cutting technically voluntarily. Dr. Aldo, I wanted to get sort of your thoughts on the update of Latin America, because it does appear that where there is new supply and additional supply coming this year, Guyana and Brazil are really outperforming. What's your view from there? On mute, I think.
Yeah, sorry. That's indeed the case, and that's where the action is going. If I were to summarize the market right now, it's really about the Chinese demand, Indian demand, and then supplying the Americans. And Brazil, Guyana are going to be important players for supply growth, and they are not constrained by any quotas. And but I must add that going back to the US, performance in New Mexico is pretty impressive. So New Mexico is in a way the new Mexico, Mexico the country. New Mexico is now producing as much as Mexico itself. So that also adds to the global supply equation, and that may complicate the balancing of the market in the terms that have been defined, at least over the last quarter.
What about, Aldo, the dramas going on in the US with this so-called debt ceiling, where the US government has to agree to raise the limit in which the Treasury is allowed to borrow money, and they're stumbling on that? Does that matter for South America, Mexico borders, all of the Americas, as we say?
Well, it will only matter to the extent that it has. If the agreement were to result in higher interest rates that affect countries that are already highly indebted, that will be the main effect. But otherwise, it's hard to see anything there. And in any event, it's while it makes for great daily newspaper stories or news stories, it's highly unlikely that they won't get to an agreement.
It's highly unlikely. The famous last words as the car went off the cliff. Daniel, I wanted to just pick up on your knowledge of Asian demand. It was mentioned there, China maybe, peak oil demand as a major economy in 2027, 2028. Of course, Gulf Intelligence famously reported last year, I think probably the first to say a peak oil demand was on the horizon for China. But so boast if you don't mind. Nonetheless, South Korea is a country I know you follow closely. The health of those peripheral economies to China. What is the outlook there for that demand for the other Asian major economies to be part of this second half of the year demand soar?
Basically, we believe that in actually after June, the overhauls and maintenance in South Korean, also Chinese refineries are going to end, and we are going to witness a sort of soaring in demand in East Asia, including South Korea. And I believe that based on some technical or some market issues, now some South Korean refiners are now the volume of their imports from Middle Eastern countries are now flat, but it's going to increase dramatically. So based on my understanding, of course, Iran is not exporting any oil to South Korea, but when it comes to China, I believe that Iran is going to increase its exports to East Asia, including China, and of course many other countries recently Iranian president signed a sort of MOU with Indonesia for somehow exporting products to Indonesia as well. It's not a contract, but it's an MOU. But it shows that Iran eyes the other East Asian markets. But in terms of South Korea, I believe that in the next quarter we are going to see more exports from especially the Middle East to South Korea, and demand is going to increase significantly there too.
Let's go to the survey question, which sort of tackles this issue of the Saudi-Russia piece. Would Saudi Arabia be willing to proceed with further oil supply cuts if Russia continues not to comply? The story of 3 years ago, of course, in March 2020, was the answer to that was no, and hence the divorce and the fallout and the noise, and then they obviously remarried and all was well, and the last 3 years tells its own story. But are we in a place where Saudi Arabia will be willing? Obviously, they made a cut announcement this last month of 500,000 barrels a day. Saudi Arabia expecting Russia to had announced the willingness to do the same. 99% of market research indicates that Russia are not doing anywhere near that. So my question is, would Saudi Arabia be willing to proceed with further oil supply cuts, i.e. they're meeting in 2 weeks' time, if Russia continues not to comply? Yes or no? Yes or no?
I just have one choice.
You just have one choice. Yes. That's what happens when you live in Tehran, I'm afraid. there's one choice. No, there should be two on your screen, but maybe there isn't.
Oh yeah, you're right. It's down.
Don't know would be a good one.
Don't know is not an option.
Okay,
but Kate,
yeah.
Go ahead. I wanted to ask you, we just had the news out this morning that Germany is apparently now one of the first major economies into a technical recession, which is, of course, what feeds the shorts in the market. This ominous recession that's around the corner everywhere, about to arrive, and hence the demand softness. Germany has arrived there. I just wanted to get your thoughts on where that goes, that sort of macroeconomic outlook versus this short challenge.
Yeah, no, I think it's a very confusing market at the moment. I mean, you look at what's happening in the States with the debt talks, and the debt ceiling. It looks like they may be getting closer, but they're cutting it very, very short. So there's uncertainty. You've got the dollar rising as a result of optimism that they will reach an agreement. You've got recession. You've got inflation down in the UK. So it's very hard to see a sort of, a coherent picture of markets these days. The DAX was up, even though you say that Germany was in recession. But going back to this Russia situation, I think it may be that Moscow was not very pleased with the fact that Zelensky was invited to the Arab summit. I mean, that was quite something, wasn't it? Which is sort of a bit of a surprise, considering they're so sorry, my phone is buzzing. So I think it may have been that the response came after that. Basically say, hang on a second. But, they've made their bed. They have formed this alliance with Russia on OPEC, regardless of politics. I don't think it's about to fall apart. I mean, I may be wrong, but, we've seen it in the past. Yes, they didn't agree. But I think Russia, if anything, Russia needs, Putin doesn't have that many friends, so he's got this powerful Saudi prince who is, who's his ally. I don't think he's going to give that up. China, yes, is an ally, but China's being quite clever. They're not committing to long-term gas deals, the Siberia pipeline. They're sort of, it serves their purposes now, but they don't want to completely break ties with other countries and worsen the situation with the US. So I think well, you
wonder where all of these things add up. Of course, we're talking the 10,000-foot view of Saudi, Russia in their geopolitical equation, but then there's all of these other 5,000-foot geopolitical relationships being realigned in the region with Saudi and Turkey and the Iran rapprochement and Israel and the Abraham Accords and all of these other things. And there's a lot of threads there that have to stay aligned in order for this perfect harmony to continue, and perhaps there's going to be some challenges to it, like, as you point out, Zelensky at the Arab Summit seems, how are these all sustainable alignments? Just to throw you into the deep end on this, Dr. Aldo, Mexico's president urges Latinos not to vote for Rick DeSantis after his his announcement to join the presidential campaign this week because of his hardline views on immigration. It's an opportunity to sort of start the inevitable conversation of the U.S. presidential election, and it's sort of if you like, ripples across the world, and ripples, obviously you're next door, so clearly ripples to you. Your thoughts on this position by the Mexican president and other issues related to this presidential campaign? How noisy is it going to get?
It will be noisy. It's getting noisier if we are only focusing on the U.S.-Mexico relationship, migration, trade, and drugs as key drivers. These type of statements from the Mexican president just add unnecessary noise, and in any event become the big question is how the U.S. will react to such a statement, given that Mexico is hypersensitive to foreign countries giving opinions to domestic political processes. So the Mexican president has decided to intervene with these opinions. Who knows what might be the reaction from the U.S. But incidentally, there has now been the policy shift, if you will, foreign policy shift from the Mexican president. You may have seen that the Peruvian Congress has declared persona non grata. Basically, he's not welcome, the Mexican president in Peru, because he's not willing to recognize the new government of Peru. So this is part of a multi-track complication of this relationship.
Another part of it has been the recent indications that the Biden administration is starting to thaw a little bit on constraining Venezuelan oil production.
Mm-hmm. And it's but sticking with the Mexican story, yeah. I think there will be an accommodation, and on the U.S.-Mexico front, we also have to wait until the elections, both in the U.S. We will be having next year presidential elections in the U.S. and in Mexico, and these will be conditioning a lot the political process and potentially some of the energy corporation issues.
Would you like to announce your candidacy on this podcast?
I'm still consulting with my supporters.
Let's give Daniel the final word, speaking of all things geopolitics, and get the survey result. A big no, a big no. Would Saudi Arabia be willing to proceed with further oil supply cuts if Russia continues not to comply? A big no. Let's post that on social and see if the rest of the world agrees. Daniel, I wanted to get your thoughts, a sort of update, if you like. We had the big announcement a few weeks ago of the Saudi-Iran rapprochement, which ultimately, at the end of the day, the small print was, you open your embassy, I'll open my embassy, and we'll talk nice about each other or something. Is there any real tangible new add-ons to that, or is this just simply going back to what was 7-8 years ago, which was, yes, we had embassies, but we still didn't like each other very much?
I believe the fundamentals of Iranian-Saudi relations have not changed, and it's not going to change anytime soon, because the Middle East region, as you know, consists of some stronger countries and some smaller ones. The stronger countries are Turkey, Iran, Saudi Arabia, sometimes Egypt and Iraq. And the other ones are considered as the smaller ones or the weaker ones. But despite these are some stronger countries comparing with the others, none of these countries is capable to make a hegemony over the whole region after the Ottoman Safavid Empire's wars 300-400 years ago, we never had a sort of dominant power in the whole region, and foreign powers were dictating their demands or their thoughts here, and the smaller powers were always trying to use the influence of foreign countries in this region to follow their interests here. After the US decided to withdraw its presence or reduce its presence in the region, these stronger countries, Turkey, Iran, Saudi Arabia, the others, try to use the open space for expanding their influence in the region through proxies, through wars, through the Arab Spring, blah, blah, blah. But at the end of the day, we can see that still none of these powers is able to become the first dominant power in the region. And the fight was somehow useless. But the fight within the last 1 decade almost has resulted into special security concerns and new security problems. For example, a decade ago, Iran had almost no presence in Yemen, but at the moment it has. So if you want to get to a conclusion, even if you want to back to 1 decade ago, 10 years ago, the situation has significantly changed. You have new problems. You had the civil war in Syria, the civil war in Iraq, the regime change in Egypt, and blah, blah. So I believe that there should be new type of sort of equation in the region. But the factor of China's demands for security in the region is very important. Americans are not considering the Middle East security as their own security anymore. But China is doing the same too at the moment. So the Chinese element is very important because China has enough leverage on Iran and also on Saudi Arabia to push them for a sort of peace. But they do not have enough incentive to interfere every problem between the two states. So I think the problems are going to remain, but probably they're not going to flare up. Because Iran cannot forget that it's selling 95% of its oil to China. And also Saudi Arabia is trying to open a new chapter in its strategic, actually international relations.
It will certainly, we need to wrap up, but certainly be interesting to see if China can introduce a new geopolitical strategy of stability and protecting its interests without deploying a security corridor that the Americans saw or delivered for 50 years and continue to do so. Can the Chinese strategy succeed without that? That certainly will be interesting. Whatever we've said over the last half hour, it seems it's reversed the trends of the global oil markets, because 30 minutes ago they were trending negative. Now they're trending positive. So all of 0.01%. So I'm not sure if we've moved the needle on that, but nonetheless, there's been some very interesting comments and insights. As always, it's wonderful to have Aldo Flores Quiroga join us from Mexico, Kate Durian, of course, from Dubai, and Daniel Rahmat from Tehran. Thank you very much for your insights today. And we look forward to see where this all goes as we march towards the next OPEC meeting. It feels that this OPEC Plus meeting might be a little bit more than the usual 10-minute rollover Zoom call. We'll have to see. Thanks, everybody. All the best.
Thank you.